Assalamualaikum and hi. Today we are going to present about payment and acquisition cycle, which we divided into two. First, for acquisition or purchase, and the second one is the cash disbursement. Before we start, let me introduce the presenter for today. Aina Amirah binti Nahrawi, Naimatu Izzati binti Nuruddin, Najwa Balkish binti Muhammad Amin, Nur Batrisha Adira binti Muhammad Nawawi, Nashatul Afika binti Nordin, and the last one, Farah Adibah binti Muhammad Yusri. So now, enjoy the video.
The first assertion is completeness. Completeness is where all acquisition transactions are completely recorded. Next, the audit objective for completeness is to check whether all the acquisition transactions are completely recorded. The class of transaction and relevant accounts are bank account, purchase return account, purchase discount, creditors account, and expenses account. The internal control for completeness are: first, voucher for purchase order, receiving reports and vouchers are pre-numbered and accounted for. Next, if the number has been recorded twice or there is a missing number from the list, it will be easy to figure out the problem. Next, there are two types of audit procedures. First, test of control, which examines bank reconciliation and observe the preparation. The audit evidence for test of control are purchase order, receiving report, and also voucher. The second audit procedure is substantive test, which trace from a file of receiving reports and file of vendors' invoices to the acquisition journal. For substantive test, the audit evidence are receiving report and vendor invoice. Lastly, the possible misstatement that might happen is an overstatement of net income and owner's equity.
Hello, my name is Nur Batrisha. For the next assertion is accuracy, which is all purchase or acquisition transaction are accurately being recorded. The objective to ensure that all purchases are properly and accurately recorded. Class of transaction and relevant account is bank account, purchase return account, purchase discount account, creditor account. Internal control. First, calculation and the amount are internally verified. Second, batch total are compared with completed summary report. Third, acquisition are approved for price and discount. Audit procedure. Test of control. First, examine indication of internal verification. Second, examine file of batch total for initial of data control. Third, examine indication of proof. Substantive test. First, compare recorded transaction in the acquisition journal with the vendor's invoice, receiving report, and other supporting documentation. Second, recompute the clerical accuracy on the vendor's invoice, including discount and free. The evidence related to substantive test is purchase requisition, purchase order, receiving report, and vendor invoices. Possible misstatement: overstated or understated amount in financial statement.
Hi, my name is Nashatul Afika binti Muhammad Nordin. Today I will talk about the assertion of occurrence in the acquisition and payment cycle. Occurrence is all recorded acquisition or purchase are actually occurred and acquired. Next, the audit objectives of the occurrence is to check whether all acquisition are actually recorded. Next, class of transaction and relevant account can be divided into 5, which are bank account, purchase return account, purchase discount, creditors account, and expenses account. Next, the internal control procedure for occurrence is the vouchers for payment of acquisition should be supported by proper documents such as purchase order, receiving reports, and vendor's invoice. Next, there also should be a procedure for authorizing all transactions related to purchase. In the audit procedure, test of control is to inspect documents to support all acquisitions are authorized and all vouchers prepared for payment of purchase are accompanied by supporting documents. For substantive test, it is inspection of documents by vouching selected transaction from the payments journal to supporting documents. Moreover, the audit evidence for test of control are purchase requisition, purchase order, receiving report, and vendor invoice. For substantive test is purchase requisition, purchase order, receiving report, cancel checks, and vendor invoice. Last, for the possible misstatement is the financial statement overstated.
Now, we move to classification. Classification is an acquisition or purchase transaction are correctly classified. The audit objective for classification is to check whether all acquisition transactions are correctly classified. Next, there are 5 classes of transaction and relevant account, which are bank account, purchase return account, purchase discount account, creditors account, and expenses account. For the internal control procedures, some control include adequate approval from a supervisor for journal entries, an adequate list or chart of accounts with description of each, and comparing balance with budget amount. Types of control of classification are examine procedures, manual and chart of accounts, and examine indication of internal verification. While the substantive test is compare classification with chart of accounts by referring to vendor's invoice. There are 4 audit evidence for this assertion, which are purchase requisition, purchase order, receiving report, and vendor invoice. Last but not least, the possible misstatement is classification misstatement of unrecorded accounts.
Hi, my name is Najwa Barkish binti Muammil. So today, I'm going to present about posting and summarization. The first thing first, I will explain about the audit objective. It is to check whether all acquisition transactions are correctly included in the account payable and inventory master file and correctly summarized. Next, I will explain about class of transaction and relevant account. These accounts are divided into 5. The first one is bank account, second one is creditor account, the third one is purchase discount account, the fourth one is purchase return account, and the last one is expenses account. For internal controls, it is divided into 2. The first one is account payable master file, contents are internally verified. The second one is account payable master file, or trial balance total are compared with general ledger balance. Tests of control and substantive tests are contained under audit procedure. So here the further explanation about audit procedure. The first one is test of control. It is to examine indication of internal verification and to examine initial on general ledger account indicating comparison. Next is substantive test. It is to test clerical accuracy by putting the journal and tracing posting to general ledger, account payable, and inventory master file. Here is audit evidence. The first one is purchase requisition. The second one is purchase order. The third one is receiving report, and the last one is vendor invoice. The last one is about possible misstatement. It is the misstatement of account payable and expenses.
Hello, my name is Farah Adiba and I will be explaining on acquisition transaction of timing. Timing means acquisition transactions are recorded on the correct dates. The audit objectives are to check whether all acquisition transactions are recorded in the correct period. These are some of class of transaction and relevant accounts, which are bank account, purchase return account, purchase discount account, creditors account, and expenses account. For the internal control, the policies and procedures requiring the recording transaction as soon as possible after goods and services have been received. Also, dates are internally verified. There are two audit procedures. For the first, test of control, to examine procedures manual and observe whether unrecorded vendors invoice exist, and to examine indication of internal verification. The second one, substantive test, is to compare dates of receiving reports and vendors' invoices with dates in the acquisition journal. These are few audit evidence, which are purchase requisition, purchase order, receiving report, and vendor invoices. If there are any possible misstatements, they are unrecorded or non-existent accounts.
For cash disbursement, the concept of completeness is where all cash disbursement transactions are completely recorded. Next, the audit objective is to check whether all the cash disbursement transactions are completely recorded by the company. The class of transaction and relevant accounts are cash in bank, account payable, and purchase discount. There are two internal controls, which are checks are pre-numbered and accounted for. Second, the bank reconciliation is prepared monthly by an independent employee or recording cash disbursement or custody of assets. Next, there are two types of audit procedures. First, test of control, which account for a sequence of checks and examine bank reconciliation and observe their preparation. The second audit procedures are substantive tests, which reconcile recorded cash disbursement with the cash disbursement on the bank statement. The audit evidence for substantive tests are check and cash disbursement transaction file or listing. Last but not least, the possible misstatement that might happen are overstated liabilities.
Hello again, it's Patricia. Next is accuracy, which is recorded cash disbursement transactions are accurate. Audit objective, to check whether cash disbursement is accurately recorded. Class of transaction and relevant account, cash in bank, account payable, purchase discount account. Internal control, calculation and amount are internally verified. Second, the bank reconciliation is prepared monthly by an independent person. Audit procedure. Test of control. First, to examine indication of internal verification. Second, examine bank reconciliation and observe their preparation. Substantive test. First, compare cancel check and electronic bank records of disbursement with the related acquisition journal and cash disbursement journal entries. Second, recompute cash discounts. Third, prepare a proof of cash disbursement. Audit evidence related to substantive test. First is check. Second, cash disbursement transaction file listing. Possible misstatement. Overstated or understated amount in revenue, expenses, liability, and asset accounts.
Okay, let's proceed to the cash disbursement of occurrence. It is all recorded cash disbursements are occurred. Next, the audit objective of the occurrence in the cash disbursement is to check whether recorded cash disbursement transactions are received. And for class of transaction and relevant account, it is in the cash in bank, accounts payable, and purchase discount. Furthermore, in the internal control procedure, the segregation duties between accounts payable and custody of signed checks or authority to disburse funds electronically. Next, to examine support documentation before signing of checks or electronic disbursement of fund and authorized person. And last, the approval of payment on supporting documents is given at the time checks are assigned. Okay, let's proceed to the audit procedure. For test of control, it discuss with personnel and observe activities, also examine indication of approval. For substantive test, it review the cash disbursement journal, general ledger, and accounts payable master file for larger or unusual amounts. Next, it also trace and examine the cancel check for authorized signature, proper endorsement, and cancellation by the bank or used bank, records of disbursement to the related acquisition journal entry, and examine for payee name and amount. And lastly, it examines supporting document as part of the test of acquisition. Last but not least, for audit evidence and possible misstatement, it use check and cash disbursement transaction file for listing. And for possible misstatement, it's overstated liability.
For cash disbursement, classification is cash disbursement transactions are correctly classified. The audit objective for classification is to check whether all cash disbursements are correctly classified. There are three classes of transaction and relevant accounts, which are cash in bank, account payable, and purchase discount. For the internal control procedure, first, an adequate chart of account is used. Second, account classifications are internally verified. Tests of control of classification are examine procedures, manual and chart of accounts, and examine indication of internal verification. While the substantive test is compare classification with chart of accounts by referring to vendor's invoice and acquisitions journal. There are two audit evidence for classification under cash disbursement, which are check and cash disbursement transaction file or listing. Last but not least, the possible misstatement is failure to record cash disbursement from all accounts involved.
Again, we will explain about the posting and summarization point, but this time in terms of cash disbursement. Cash disbursement transactions are correctly included in account payable master file and are correctly summarized. Next is about audit objective. The audit objective for these cases is to check whether cash disbursement transactions are correctly recorded in account payable master file and correctly summarized. For class of transaction and relevant account are divided into three. The first one is account payable, second is purchase discount, and lastly is about cash in bank. So now I will explain about internal control. The first one is account payable master file contents are internally verified. The next one is account payable master file or trial balance total are compared with general ledger balance. So now is about audit procedure, which is divided into two. The first one is test of control. The next one is substantive test. For substantive test, it is a test clerical accuracy by putting journal and tracing posting to general ledger and account payable master file. For test of control, it is to examine indication of internal verification. The next one is to examine initial on general ledger account indicating comparison. So now is about audit evidence of posting and summarization. The first one is check. The second one is cash disbursement transaction file or listing. Lastly is about possible misstatement. For this point, possible misstatement that can be found is overstate liabilities.
Lastly, we'll be going on cash disbursement timing. For timing, as cash disbursement transactions are recorded on the correct dates. The audit objectives is to check whether all cash disbursements are recorded in the correct period. These are few class of transaction and relevant accounts, which are cash in bank, account payable, and purchase discount. For the internal control, the procedures required recording of transactions as soon as possible after the check has been signed or electronically submitted for bank processing. Of course, dates are internally verified. Moving on to audit evidence, which are check and cash disbursement transaction file or listing. Lastly, the any possible misstatement is early or late recognition cash receipt.
Alright, that's all from us for the payment and acquisition cycle. Thank you for watching.